Coming up, are tech stocks in a bubble? Gold and silver prices are on the rise. The dollar continues to roll over after hitting resistance. And look at oil prices today, dropping like a rock, even though it's not a rock, it's, you know. And the House is expected to vote today on ending the record-long government shutdown. What does this mean for stocks, commodities, and currencies? And here's a little insight on why oil prices are dropping so much. OPEC oil output rises by 30,000 barrels per day in October, survey finds. So essentially, supply went up. And I want to start today by taking a look at the precious metals. Gold is doing something very interesting, and I wanted to get you guys' thoughts in the comment section on this. So what we see here is gold did an interesting pattern this year. Essentially, we saw a huge run up in the price of gold, a consolidation period, and then an explosive run up where we had sort of a short-term blow off top. And now we are getting a little bit of a resurgence in price. And the question is, are we headed back to all-time highs and beyond? Or was this going to be a longer term top for a while? Well, I'm going to switch over to the weekly chart and just take for a second a visual screen capture of what you are looking at, right? We can see big move up, consolidation for multiple months, huge run up, sell off, and then a little bit of an uptick. And I want to show you a very similar chart. So what we're now looking at here is the 1970s. Going into the 80s, the gold market was explosive. It was moving like crazy. We had super high levels of inflation and a lot of worries about what was going to happen next. Does that sound familiar? Well, we had a huge run up, and then what happened? Huge run up, consolidation sideways for multiple weeks, then a massive run up in price, hitting $800+ an ounce for the first time. And remember, this is back in the 1980s when people were jamming out to some really great music. But what happened next? If we go bar by bar, what you can see here is that we had a similar massive blow off top in the price of gold. And then what happened? Well, we had a little bit of a resurgence in price, but then something kind of scary happened. We had signs of bulls coming in. People were like, hey, inflation's still a problem. You know, we have a ton of worries about the government. And then we sold off again. And at this point, we came all the way down to some longer term moving averages. But then we had a little bit of an uptick. And look what happened next in gold prices. We proceeded to never make it back to those highs and to continue to move lower, not for a few weeks, not for a few months, but for a few decades. Take a look at this. We didn't get back to the same levels in gold prices for, let's just map it out, over 10,000 days. And in fact, from the highs, we had a max drawdown in gold prices of over 70%. Now, I'm not showing you this because I'm bearish on gold by any means. I'm showing you this because I've seen comments recently on my YouTube channel of people saying just buy gold all the time because it only goes up and it will never come down. But I just showed you what is supposed to be a safe market, quote unquote, going down by 70%. And you might say, well, yeah, that's only if you bought the all-time highs. But we are very close to all-time highs currently in gold. Take a look at this current chart. If you think we cannot have substantial drawdowns in gold, I'm telling you, please be careful. Do I think that's likely to happen? No. I'm going to go out and say, like, I still think gold has upside. However, I'm just pointing out, never say never and never be too arrogant to believe that a price must go in the way you think it must. That being said, is it different this time? Well, to be fair, when it comes to gold prices here, if we draw some Fibonacci retracement levels, we did tag the 38.2% retracement, and this is where stops and trade management play a big role. And what I mean by that is I am not a buy and hold forever type of person in most things of my active market participation. Now, I do have some accounts where I just hold a diversified stuff and, you know, it's more of a back end, not really looking at it too often. But from a trading perspective, how could we play this? Well, let's say that you are bullish on precious metals. Specifically, I really like silver. I'll show you why. If we switch over to the Edgefinder's AI scanner and switch to silver, you can see that we have a +5 score. Our technicals are getting a bullish reading. Institutional activity from the commitment of traders data still shows net accumulation. Inflation statistics have come in a little soft. That's good for precious metals. The jobs market has been weak, and that's also good for precious metals. Where we lose a lot of points is economic growth, which has been strong in the US, which sort of dulls the shine of precious metals. But the overall bias on Edgefinder is still bullish on silver at this time. If we switch over to gold, you can see that gold is getting a close score, but only +4. Remember that Edgefinder over 5 is considered bullish. But regardless of whether I'm looking at gold or silver, I am looking for at least a pullback in either one before considering a trade. Let's navigate to silver, and we can see this thing is up 2.25%. A lot of strength has returned to the precious metals world, at least here in recent times, and I think that a pullback on silver looks really attractive. I'm loving the way this chart is moving. We've broken through consolidation looking left, and these candles look like they mean business. So if we were to get a week or so of down price action in the precious metals, I would be considering possible buys if we were to make a move back down to the 49 range. Now I can drop this thing down to the 4-hour time frame, and I got to draw my fibs even further because this thing just keeps moving higher. This 61.8% retracement looks really attractive for a possible retest entry on precious metals. Now the 38.2% level where we found support here intraday also looks pretty attractive. So looking at the 4-hour time frame, we now get this additional level of potential support looking left. What we can see here is that if price were to pull back into this region, previously we did see very sharp buying at that level, and we do have bullishness on the Edgefinder. So to me right now, precious metals are back in play. Of course, I'll have to take a look at Edgefinder's reading at that time to conclude if I want to potentially take a trade or not. And just as a reminder, the Edgefinder is on super sale right now. We recently kicked off our 40% off Black Friday discount where you can get a copy of the Edgefinder for a 40% discount off of the usual price. This saves you hundreds of dollars, and guess what? It is a one-time payment to get access to Edgefinder. Not monthly, not yearly, one time. Full transparency, we do intend to raise the price of Edgefinder over time, and this one-time price gets you in and you don't have to pay again. So take advantage of the discount and lock in the low prices while they're available on Edgefinder today. And as a little bit of a secret bonus, for people who are watching today, we're going to be doing a little bit more than 40% off discounts if you scan the QR code that you see on your screen right now and message in. This is on a first come, first serve basis. We will be doing this for a very limited time at 45% off discounts. Again, that's the lowest price we do all year, so don't miss it. Let's also now take a look at the US dollar. The US dollar seems to be rejecting here at resistance around the 100 level. Take a look at how we've overall basically pulled back recently from this zone. I wouldn't draw any sort of major conclusions about where the dollar is going next, because even though we have retested or backed off of this 100 level, I wouldn't come to the conclusion that that means that we're just going to crash down to the bottom end of this range. Because again, this very well could be another higher low pending on the dollar index before making a bigger push to the upside. Perhaps the longer term consolidation zone is really up to 101.5 to 96.5. And to build a bias on the dollar, I have been doing this recently in my videos. Let's take a look at the US economic heat map and see what it says about the dollar. I'm very excited with the government shutdown coming to an end to be getting some key economic data points, specifically the non-farm payroll, which we haven't gotten since September, some inflation metrics like the CPI, PPI, and year over year, which we are also very desperately needing some new information on, retail sales, and GDP growth statistics. And with the government shutdown coming to an end, I just want to let you know that with all of this data coming in, we are likely to experience some pretty drastic changes in scoring within Edgefinder. Viewers have noted on my channel here recently that the Edgefinder has also been flying in the blind, in the sense that because the government shutdown has delayed many of our scoring metrics, we are seeing scores that have not reflected this. Now, I would argue that it has not made the readings within Edgefinder useless because we're all operating off of the same available data. But I will agree that having a fresh incoming round of data will give us a new updated scoring across the board. But just personally, as using the Edgefinder in the last few, weeks with the government shutdown taking place, I've still found some really good trades based on the many other metrics that are not sensitive to government shutdown data. Like, for example, the seasonality trade that I've been in recently. A big part of the reason I'm still bullish on stocks is simply because historically they're very bullish this time of year. Here's a look at NASDAQ seasonality, which tends to perform well into year's end. And the red line is year-to-date performance. So far, we've been very correct to ride this seasonal momentum. I thought this was kind of interesting too. This is the dollar index's seasonality, and we actually do see towards the year's end a nice little uptick in dollar strength, which we have been so far seeing as well. But seasonality, like anything else, is not perfect. You can see that in the beginning of this year, we were expecting bullishness for the dollar based on seasonality. We got bearishness. But then we aligned pretty well for most of the rest of this year. We actually bottomed out right around the same time that seasonality had suggested we would. Cycles are a huge thing in my analysis, and I think they're very, very underappreciated in the retail trading space. Fundamentals and seasonality, retail sentiment, institutional sentiment, all of these things help to build a bias that technical charts by themselves don't always give us. I also wanted to do a little bit more of a deep dive in the US economy because there's something else that people have been mentioning, which is the economy is a really sensitive topic in the sense that it depends who you ask on whether the economy is doing good or bad. So which one is it? Is the economy performing good? Or is the economy performing bad? I've been talking about this in my videos, but we've been experiencing what is called a K-shaped economy in economics. People who own assets, stocks, real estate, etc., have been really benefiting in an environment where the stock market has gone straight up and corporate earnings have been rising dramatically. Real estate values have also been accelerating to the upside, and high interest rates actually favor people who have extra money to sit in money market funds and make additional income. But people who do not have assets, real estate, stocks, and money to invest in, passive investments have not felt the same love. And by the way, this is kind of always the case in economies. People who have, stuff typically get richer, and people who do not have stuff typically do not experience that same level. But it feels extremely strong in recent years due to the status of the stock market, real estate, etc. So the question is the economy good or bad? Well, again, it depends who you ask. From an overall output of our economy, the economy is strong. GDP growth has been above trend and above expectations for some time. At least in recent performance, we've seen exceeding expectation reports. And if we look at corporate earnings for some of the big companies in kind of the driver's seat of our economy, things have been really strong. Like Apple has beaten their earnings per share estimates. People are definitely still spending money on Amazon, where their earnings per share have been dramatically beating expectations. Google, who makes most of their money through advertising, is also doing quite well. Again, if the economy was in the gutter, people wouldn't be advertising nearly as much as they are. But the problem with all this is true, and the economy is strong as an overall output, but this is because a lot of the spending that's going on is actually from the wealthy class and the big corporate themselves, right? Big corporate is spending a ton of money within the economy. The wealthy consumer is also doing quite well in this economy. I mean, if you think about it, if you've been long stocks with a ton of money invested, you'd probably be feeling pretty good too right now. And maybe you do. I'm not trying to assume anything about the viewer watching. I'm just giving you a hypothetical here. Home prices have also been on the rise as well. And elevated interest rates have made it possible for people who have money to lend it out and collect nice received dividends. Retail sales, at least as of the latest available data, have also been growing. So if it feels like I just gaslit the heck out of you and you are not necessarily in the 1 or even 10% of wealthy people in America, I'm not trying to do so. I'm just showing you why the stock market has continued to go up despite it not feeling very great for the average person out there. Consumer confidence has actually been trending lower here over recent years. Things are expensive, and that makes people feel like they don't have as much money. But the reality is this can go on for a while. And it actually happened dramatically in the 1920s before the Great Depression. Rich people got way more rich, and poor people did not feel that same love, and ultimately the system reset. But it took many years before that happened. So for me, I am recognizing that there are issues within the economy, but there are also some very strong aspects of the economy that I think can continue to bolster stock prices for now. Now, I'm a trader, right? So I'm trailing stops. When we take a look at the NASDAQ trade that I'm in, right, I'm looking for higher lows, higher highs to trail a stop and to try and just ride the trend as long as it goes. I'm not necessarily trying to call a top, but I do think at some point these issues that I've raised will probably come to roost. It's just a question of when, and I'm not willing to try and time when that happens. I think eventually we will have some sort of reset or dramatic sell-off in stocks and asset prices could go down, but trying to time that has been devastating for many short sellers and people who have been bearish on this market the last few years. And I personally think that it can continue to go on for quite a while before we ultimately see a ginormous reset. So again, I'm not short. short. I'm not willing to bet that the top is in. And I still think that this market, although it not necessarily is fair for everyone, I still think the market can go up. Here's a look at crowd sentiment here, looking at the put to call ratio for the S&P 500. Market has been rebounding here, and so too has sentiment. We went from a very bearish market at the low end of this range, which, by the way, that is around the time that I bought. I used the put to call ratio quite heavily on the Edge Finder to help find the trade setups that I take on indices. So we saw a huge spike in bearish sentiment right around the low end of this market, and I bought into that. Now, this was not the sole reason. Remember, the Edge Finder is a confluence tool. The name of the game with Edge Finder is it scans lots of stuff to generate the report that we get. So the NASDAQ trade was not just because the put to call ratio looked good. It wasn't just because the economic data that we're getting still favors some upside for corporate earnings, right? It's a mixed bag where we're also looking at sentiment in the market. Are people really scared? Technicals, what does the trend look like? Economic data, what does inflation, jobs, and interest rates look like? We're building evidence. We're building confluence. That is how the Edge Finder scores assets. And just as a reminder, do not miss your chance, as I mentioned earlier, to pick up that Black Friday 40% off discount or to message in for those secret discounts I mentioned earlier. Oil prices are also dropping pretty hard here today. This is definitely a welcomed thing in the sense of what happened here. Let me explain. So when it comes to oil prices, we always want to be interpreting whether or not the move recently is more of a supply dynamic, supply problem, or a demand problem. Let me explain what I mean by this. If a dramatic increase or decrease in supply of oil reserves enters into the market's knowledge, that can drastically cause prices to move, right? If you have more supply, that causes the market to go down for oil, right? More supply, less demand, and vice versa, right? This is economics 101. Now, if we talk about demand side, if the economies of the world are demanding huge quantities of oil, that's going to make the price go up, and vice versa. If you have low demand due to slow economies or recessions, oil prices can go down. So the question becomes with this one, which one is it? We have oil prices moving down. Does this tell us that the economies of the world are crashing, or is there a supply issue going on? Well, the answer, in my opinion, is there's a supply problem for oil right now. I mentioned at the beginning of this video that oil prices were moving lower drastically today because there was an announcement of significant increase in output or supply. Rising supply is one of the less scary aspects. What I mean by that is that less supply or more supply causes oil prices to go down. But the scarier thing would be if we're seeing oil prices crash lower because the economies of the world are doing terrible, right? We may have a little bit of that here in the sense that maybe economies are slowing a little bit. But the bigger thing is that with increased supply moves like this, right, that we see here today, this is actually very good for the inflation story. Remember that everything in our stores, everything in our economies is indirectly or directly impacted by oil prices. If oil prices are dropping, what does that do to the price of things in stores over time? Well, it ricochets in and causes prices to go down, or at least to not rise as quickly. Inflation is very sensitive to oil prices. Remember that, because if you see, remember back in 2022 when oil prices were dramatically rising and that was causing huge spikes in inflation. I don't know if you guys remember this, but I remember going to the store, the grocery store in 2022 and 2023, and it was very real. Prices were going up very dramatically. Now, I know some people in certain places of the world may still be feeling that way because inflation is still high in certain economies. In the US, we are experiencing a moderate level of inflation. Yes, prices are still going up, and 3% is not always indicative of all the things that you go out and buy or sell, right? Now, when it comes to the grocery store prices, they may be moving up more than 3%, or air travel may be moving up less than that, right? Air travel has been one that's been a little bit more muted. So it depends what thing you're specifically buying, but the CPI measures a basket of many different things and gives you an indexed feel. So inflation's rising, but it's not super dramatic like it was a couple years ago, right? A couple years ago, we had really painful inflation in the US, but other places are still feeling the pinch. Here's the UK, which had even higher inflation levels, up to 11+%, but is now still dealing with elevated levels of inflation. what we can see here is that their inflation is at 3.8%. It's higher than the US. But globally as a whole, yes, we still have prices rising. This does not mean prices are going to go down, by the way. Prices don't go down unless historically speaking, prices don't usually go down unless you have massive technological advancement, which causes prices to drop naturally in a capitalist society due to, competition. But then you also have prices going down in a more dire or sinister environment, which is massive recessions. And, that's something else completely. We don't necessarily want to see prices falling if it means everybody loses their job and the economy grinds to a halt. Although some people might, because if your job was super required, that type of environment strangely favors you. But as a whole, for the economy, we don't want to see recession because yes, prices would drop, but so too would, the happiness level of society and so many other things. But as always, it depends on who you ask. And real quick, I wanted to tell you about today's video sponsor, Maven Trading. Maven is a super high rated prop firm within the forex trading prop firm space, and they currently are doing some discounts for our viewers. Now, they already have some of the lowest prices in the entire prop firm space, but let's just say, for example, you pulled up there. Look how low these prices are compared to most prop firms out there. They give you many different options. You can go the standard, instant, mini. You can trade with MetaTrader 5, Match Trader, C Trader. You can go up to a 100K account. Do whatever you want here, essentially, but let's just do the 20K account. And if you use our promo code down below in the description, it is A1 Trading 5. You can get 5% off, which again, they rarely give any sorts of discounts to anybody. So we had to beg for this one, but I did ask them, hey, could you give us something to give the audience as a little bit of an extra discount? Again, their prices are priced very competitively in the space already, but you can get an additional discount with the promo code that I just mentioned, A1 Trading 5. Again, check out Maven down below in the description and see if it's right for you. And if you made it to the very end of this video, can you just do me a favor and type the word and comment the word end? I'm just curious if people made it this far, if you enjoyed this conversation where we talked a little bit more theoretical about the economy today. We got in more to the fundamental analysis, kind of education side of things within today's video. Of course, I still shared trades and ideas and things that I'm currently watching myself, but I wanted to mix in a little bit more of the educational side, or at least the conversational side about the current economic outlook that we're in. If you enjoyed this, type the word end. It tells me that you made it to the very end of the video and that you enjoyed this conversation. Thanks so much for listening. Have a great rest of your day, and we'll see you next time.